I hope you're excited because your cherry bomb for the day is in, although maybe a little sad because it's your final cherry bomb of the week. Today's cherry bomb trade involves a Strangle in GM, which has 4 out of 4 markers for liquidity, an IV rank of 13, which is a little low, but despite that, we're going to try to sell a little premium here. And I have an alternative if the Strangle is not an option that's attractive for you for that whole undefined risk thing. All right, everybody, let's move on in, now that you know about the trade, to this one. Hi, I'm Neil, and this is Option Theory, and I welcome back my already subscribed members. And for those of you that are not subscribed yet, maybe by the end of this video, I'll have earned your subscription. But for now, if you're new to this channel, head down to that description. You'll find a link to sign up for these Cherry Bomb email blasts that are sent out from Tasty Trade, not from me. And they have these trade ideas with a whole bunch of logic and all that stuff and the story behind it. But we put those trades on in a simulated trading portfolio thanks to the ThinkOrSwim platform. With that, let's build the trade. Okay, so in the Analyze tab under Add Simulated Trade, I've typed in GM here into the ticker box, and we're in the October 2nd weeklies, which as of today, which I said was August 21st, is 42 days to expiration. Right, and so to sell the Strangle, what you're going to do is you're going to left click on the bid for the 25.50 put, and then you're going to hold down the control key and you're going to click on the bid for the 32 call. That builds a Strangle. Now, you know, my screen's a little messed up down here because I've got my alternative down here. So there's the Strangle right here that we're looking at here, which will give you about $1.14 credit. Yeah, that's pretty much close to what it says in the email. And then what we're looking at now that we've built out that trade, because it's super easy to build out a Strangle, is understanding the probabilities and risks and all that associated with it, right? So here is the Strangle. Make sure that your date is set to expiration up here. You can use a little date picker that I don't have access to because my screen is too small. And then over here you see this is the date that we want to pick. All right, so we've got our probabilities built in here. Our slices are set to break even. We're looking at a 68% probability of staying in between these two goalposts here, if you're thinking about American football, right? Want to kick the ball somewhere in between here, and it's looking like those are pretty good odds, right? Now, the problem that some of you may have with this is you might be trading in an IRA, or you're not approved for these naked calls, right? Because naked puts down here, yes, you could go to infinity, right? GM could go to 0, right? At which point you would be out, I can't even get there, $2,400, right? Now, the likelihood of that happening is small, right? Yes, it's 14.8% that you're going to be on the other side of this, but making a complete and total loss and GM going out of business, I don't even know what those odds are. I get, you know, infinitesimally small. But up to the upside, of course, GM could skyrocket, right, forever. And that's your undefined, unlimited risk on that side. So if you don't like these probabilities of potentially, you know, making, what is it, $114, although we would look to manage this if it got to half of that, right? So $57 would be great, right? We'd take that off. If you don't like that, though, I have an alternative here for you. So I'm going to turn off this trade, and I'm going to turn on the alternative here, which is known to the Tasty Trade world, I believe, as a Jade Lizard. And so what we've done here is we've sold a call spread up here, right, to define our upside risks. We have, as you can see here, 0 upside risk. We have a naked put still, so we still have downside risk. And we got to move these price slices here. So I'm going to hit that slices to break even. Okay. And so we're looking at a 70-cent probability of ending up to the right of this line. Now, of course, if we go too far right, we won't make anything. We potentially lose a little bit with the commission, right? So it'd be great if we had like a little bit more than $1. Yeah, I mean, and you can take these down if you want. If you wanted to move the call down a little bit, you could do that too. But I'm just showing you this one here. So we're looking at a much better probability of ending up to this line. We still have downside risk, but we have no upside risk, right? So if you wanted to, you could add another price slice. And then you can kind of give yourself, what's the probability of me staying between these two lines here? In this case is a 57% probability of ending up in this profit zone in here. All right, so that is it for the risk analysis. It's up to you what you want to do on this one, as it always is. I'm going to go ahead and sell the Strangle. Although Strangles haven't worked out so well for me, my biggest loser, which once again, I don't hide these things. If I come over here and then I look at my profits and losses, this guy right here, UAL, was a Strangle that blew through the upside. Remember that upside risk, right? And so I cut it off near $700 of loss on that one. So fortunately, we have another UAL trade that's working out, that's getting me some money back on that one there. So getting some money back on that one. And I also secretly put on an IRA account. I actually did put a Jade Lizard on over here. So let me show you that one. Here's another example of using a Jade Lizard. But I did this one in the IRA account here so that you don't have to worry about selling naked calls, right? So here I have one of those where I'm looking at a 78% probability of profit. And even if it goes all the way up, right, I will make $30. So that is an example. I know it wasn't exactly GM the whole way through. Maybe back to the margin account here. And yeah, so thanks if you've made it this far. Thank you so much. If I've earned that like, would you consider hitting that like button for me? And if I've earned that subscription, could you hit that subscribe button and ring that bell? Because these trades are time sensitive and we want to sell that time value whenever possible. So thank you so much for joining me. I'll see you on Monday when we do a recap of how well we did over this past week. Until then, happy trading, stay safe, stay healthy.